slowdown on Wall Street, that is something that we are seeing in the Asian markets as well, largely.
Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore rupees is their new bet on the going out business.
Nodal Ministry for the auto industry has confirmed that the company qualifies the domestic value addition criteria.
For the first rates on the indices, 24,800 plus 830 is where we are starting. That's about 0.25% higher.
We've had a very powerful rally on certain kinds of stock.
Government has initiated the process of appointment of new members.
The Nifty is holding above 24,800. The mid-cap index is outperforming significantly.
Bajaj Auto has sought a GST cut on CNG two-wheelers.
Warburg Pincus, which held about 9% stake in the company as of June 2024, they've sold their entire stake in the company via block deals.
CBI as well as the West Bengal Police have filed their status reports.
As you can see on the top of your screen, it's a green screen.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it is a good day once again. Actually, you know, we started, I think, yesterday 2:30 with a 35-40 point bump on the Nifty. We are starting with that much today as well. And then, of course, we know what happened starting 2:45. There was a surge. So we'll see if that is possible today as well. This is Closing Bell, last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Rima and Surabhi. Guys, hi, good afternoon.
Hi, good afternoon. You're right, Prashant. Looking very similar to yesterday, right? And once again, it's the mid-caps that are outperforming. The difference here is that the Bank Nifty for now is charging away. So let's see if it continues.
No, absolutely. I think the Nifty Bank has given up gains from the highs of the day, but overall it is looking good. It's up about 0.56%. That's about 300 points in the Nifty Bank. But let's just look at the Nifty and start there. So it's a buoyant market. I mean, you know, 35, 40 points on an index which is at closer to 25,000. It's nothing. It's under 0.2%. But overall, it's a buoyant market. We're trading above the 24,800 level, barely so now after the sort of pull down we've seen in the last few minutes. Bank Nifty high today is 51,080. Guess what? The lower end of the gap area, which the Nifty Bank has not taken out still, is 51,087. So you almost got to that level, and then there was a bit of a pullback. So I think that is important. And we are, I think, on the Nifty Bank coming off a little bit more. Mid-cap index is up 0.6%. I mean, actually, you know, yesterday and day before yesterday, it was small caps which were firing away. Mid-caps sort of were holding back, and it's the reverse today. Small caps are lagging behind a little bit. Broader markets are doing well. Not 3:1, 4:1, but a decent 2:1 on the advances to declines ratio. So that's the overall picture. Lots of sectoral action, lots of stock-specific action, which we will detail for you as we go along. Rima.
Hi, Prashant. This is the 6th day of gains when it comes to the Nifty and the Sensex. But again, very ranged in terms of the move. So we've been swinging in a very tight band for the last couple of days. Today, the range in the Nifty is just about less than 85 points. And over the last 3 days, the range has been between 100 to 130 points. Yesterday also, it was about a 90-100 point range, which expanded only in the last 45 minutes when we had that upswing. Week to date, though, the broader markets continue to outperform. So the mid-cap index is up 2.1% for the week. The small-cap index is up 4%. And the Nifty micro-cap index is a gain of 3.8%. And sectorally, it's PSU Banks. So even as frontline banks have struggled this week in terms of an upward bias, PSU Banks have gained 3.2% this week. And with the sharp decline seen in the dollar index over the last couple of days, the metal index has been buoyant. So the Nifty metal index is up more than about 3% in the last 4 trading sessions.
Yeah, indeed. Some of these stocks have done really well on the broader market screen. That's where the outperformance continues to be. Even today, just like yesterday, it is the small cap, mid cap, and even the micro cap indices which are outperforming the Nifty. The advance decline ratio remains very, very positive. Over 1,500 stocks advancing, just about 900 stocks on the declining side. If we talk about the big winners of the day, Ireda, and of course we'll talk about this stock in more detail as we go forward. It's looking at raising about 4,500 crores of equity capital. It could be a FPO, it could be a QIP, and the market's very excited about it. So that's one example. A lot of the fertilizer names are up and about. Fact, for instance, is up about 9.5%. NFL, erstwhile known as National Fertilizers, up about 6-7%. So that's a very, very active space. A stock like Varroc Engineering surging 12%. So, across the board, there's plenty of action. And then, of course, there are the block trade favorites where big, large trades have happened today. Kalyan is an example. Kalyan Jewelers up about 6-odd%. So plenty of news, plenty of action and block deals, keeping mid caps and small caps flying high. The question is what to do over the next 60 minutes. So let's straight away get to Mitesh for some ideas. Mitesh, good afternoon. The screen is looking very similar to yesterday, same time. What's your sense and what are the trades you'll go with now?
Yeah. So, good afternoon, Survi. I think today the only difference is that the Bank Nifty is slightly better than what we were doing yesterday, though I think Prashant was highlighting a very important point that around this level of 51,080, there is a gap area and that's where the Bank Nifty is kind of stopped. But the structure to me remains slightly okay and positive. So I would still believe that there is a chance of us getting past these levels, if not today, then in the coming 1-2 sessions. And once that happens, 51,400, 450 becomes your next target area. So I'm hoping that the Bank Nifty kind of pulls up its stocks and that will support the Nifty as well. But for the time being, since it's not a complete failure, it's not a reversal from the gap level, I think we're still trading with long bias. So I have 2 buy calls. Godrej Consumer is something which is reversing. So buy here with a stop below 1405, look for targets of 1480. And the other one is Bata, after a big decline that is showing first signs of a reversal. So keep a very tight stop here, 1435, and look for a target of around 1485.
Thank you very much for that. The Nifty Bank has now slipped about 150 points from the top in a span of about 15 to 20 minutes. But let's get you an important story now. And this is a CNBC Aviation story where sources tell them that the Adani Group is looking to reduce debt. Yatin is standing by with more details on this. Yatin.
Good afternoon, Nima. And what we gather from sources is that the Adani Group promoter entities are...
Okay, we'll just come back to you, Yatin. I think... the mic perhaps is not working to its full effect, so we'd like to hear Yatin more clearly. But the flashes at the bottom of the screen, we'll go back to Yatin in just a bit. The Adani Group is looking to reduce debt. This is a CNBC Aviation exclusive. I mean, there are sort of a bunch of ways that they're planning to go about to do this. And we'll just have Yatin with us to take us through some of this. Let's look at Ambuja Cements as well and how the stock is doing. Because that is also part of some of this plan. But I think Yatin is back with us, so let's go across to him. Yatin, over to you.
Can you hear me, Prashant?
Go on, Yatin.
So,
yes.
What we gather from sources at Awaaz is that, the promoter entities of the Adani Group are most likely to sell up to 5% stake each in Adani Power as well as Ambuja Cements. This essentially comes on the back of the group's strategy to reduce the debt at the promoter level. So the promoters are looking to raise 15 to 20,000 crores via stake sales in, few of the listed companies, including Adani Power and Ambuja Cement. Obviously, the key reason for the stake sale is the Ambuja Cement, leverage buyout. And probably the promoters are now realized that they might have to sell some stake to reduce the, group level debt at the promoter level. And, when we contacted Adani Group for this particular, story, they did not comment as of now. But what we gather is that most preferred, route for the, stake sale would be a block deal. They also are exploring, with bankers relating to an offer for sale. But most likely, we could see a block deal happen very soon in probably Ambuja Cement or Adani Power.
Okay, all right, Yatin, thanks very much. Very interesting and interesting choice of companies as well in the entire listed universe. They've chosen perhaps to go with Ambuja Cements as well as Adani Power. Both those stocks under a slight bit of pressure. Some of the other Adani Group stocks as well. I mean, there's no major fall or anything, but there's some smidge of red on an Adani Enterprises, even ports for that matter. ACC is holding up positive. So mixed trends across many of the Adani Group stocks. Deven Choksi is with us this afternoon on the show. Deven, thanks for joining in. Let's start with this story. What do you make of things? I mean, just yesterday, Nigel actually caught up with the CFO of Ambuja Cements. I don't know if you caught that interview or not. And he did ask him about possible group level reorganization or restructuring, at least bringing the cement entities together. That's on one side. But now this news coming in with possibly some stake sales to reduce debt. What do you make of it? What do you think of the group? And are there any, listed companies right now, Adani listed companies that you would invest in?
Yeah, so good afternoon. Well, I believe that if the promoter level stake sale is taking place, it is resulting into generating cash in their hands, which means I think they are trying to possibly utilize this particular cash towards, I think, either paying off their private debt, whatever they have taken, or maybe I think some amount of acquisition, I think, activity which may be in process. So that could be, I think, the interpretation that one can drive. But most importantly, I think the opportunity out here, I believe that I think in respective companies, they have got a significant amount of opportunities, I think, as we talk about, be it in the enterprise where they are basically having, I think, all the 3 or 4 verticals, including the road, the airports, and the data processing, cloud computing part included in that. I believe, I think this is where probably I think they are likely to see the monetization happening into the portfolio. At the same time, I think the higher amount of tonnage handling at the ports is making case for Adani ports as well. And rest of the other companies too, I guess, I think are in the same process of going with the expansion program. So to a greater extent, any softening in the stock price could possibly mean better opportunity for those investors, particularly institutional investors, long-term institutional investors. For them, I think it makes more sense. Today, maybe I think slightly reverse situation. Today, I think the investors are approaching the promoters to buy the stake, as against promoter earlier wanted to, I think, reach out to investor to sell the stake. So I think slightly better situation at this point of time for the group as a whole, as I see it.
Okay, thank you very much for that. Let's talk about IREDA. That's another big mover today, up 8%. And now the year-to-date rally stands at 150%. The latest news flow on IREDA is that they're planning a fundraise. Abhishek joins in with the details. Abhishek.
Well, IREDA will hold a board meeting on 29th of August 2024. This is to consider a fundraising approval of about 4,500 crore, which can be raised via FPO, QIP, right issue, as well as preferential issue, any of the options that may work well for them. So if you take into account this amount of 4,500 crore and the current market price, now calculation shows that CRAR, that is capital adequacy ratio of the company, can improve from 19.5% to 29.2%, almost a 9 to 10% increase in CRAR if the fundraising is done of 4,500 crore at current market price. Equity dilution would be around 6.5%. The book value can increase by more than 40% to about 47.6 per share. Now net worth will increase by 49.5% to about 13,610 crore. And if this fundraise is done entirely by QIP or the government not participating in, then the government of India's holding can reduce by 4.5% from 75% to about 70.5%. Back to you.
Okay, all right. Thanks very much for explaining that to us, Abhishek. A big move on Ireda coming through. Devin, your thoughts on IREDA? You know, in the morning we were also in conversation with REC, and we brought up the renewable question to even REC. I mean, they're also very aggressive. They have big plans on the renewable side and financing side. And then there is, of course, Ireda. How do you look at both of these power financiers and this fundraising exercise that Ireda is doing?
So Ireda probably, I think, today is doing one of the better things, because I think current price to book, I think, is somewhere on 8+ times. And I think at this price, I think if you monetize, nothing wrong with it, because I think you're buying the equity at a comparatively cheaper price in the market. And on a 65,000 crore worth of book, I think if you are basically talking of raising 4,500 crore, which means you're trying to expand the book size to more than 1 lakh crore going forward. And that's where probably I think this fund will try and play its major role in the books. In my viewpoint, I think it's a natural process. I think the raw material for most of these companies would be money. And why not, when the market gives you premium valuation, why not actually engage that part of it? One can remain bullish on both REC as well as Ireda. And I feel that I think the long-term prospects in this intact, given the kind of growth trajectory that we are seeing in the power segment, particularly in the renewable space.
Okay. Stay on, Devin. There's another stock we wanted to address, and that's Shyam Metallics. And here it's UBS, which has initiated coverage on the stock with a buy rating. Nigel joins in with the rationale behind this bullish call. Nigel.
Well, that's right. UBS has initiated coverage on Shyam Metallics, and they have a target price of around 1,200 rupees a share. Now, they are valuing the company at around 8 times EV per EBITDA. The EBITDA that they're factoring in is for FY26-27, and on that multiple, they're giving it an 8 times multiple. But they're factoring in that the EBITDA growth from year on, that's between 2024 to 2027, well, it will compound at a rate of around 39%. So they're expecting a big upside from current EBITDA levels. What makes the company stand out? Well, according to them, they say that the pragmatic approach to focus on the value chain. They've also focused on diversifying products as well as metals, and their backward integration. That's what's going to hold them in good stead. Well, that's the qualitative aspect. But on the quantitative aspect, there are three big factors that they have stated. One is on the value-added products as a percentage of revenue as well as EBITDA. Currently, it's at around 57 to around 61%. They're expecting that number to go to the high 60s. Higher value-added products means better margins. And so they're expecting the ROCE to move from around 22% to around 28% by 2027. And finally, the EBITDA per ton, as of yesterday's close, they believe that the markets were factoring in an EBITDA per ton of roughly around 3,700 rupees. But they are factoring in a number of more than 6,000 rupees by 2027. Put all this together, UBS believes that that Shyam Metallics is well placed, and that's why they have a target price of around 1,200 rupees per share. Back to you.
Well, that's a 50% upside from the current levels. Devin, very rarely do we have this kind of an upside on a metal name. Shyam Metallics, after the up move, is at 800 rupees, and UBS sees a fair value for the stock at 1,200 rupees. Do you like Shyam Metallics, and would you concur with the estimates, the assumptions made by UBS?
So, Dima, I think as a sector, we have been looking at this space, I think, and where we find that the metal as a commodity, I think, is likely to have phenomenally return going forward. Largely with the fact that I think the input cost, the energy cost also is coming down. And at the same time, I think given the kind of capex program that the country is executing, I believe that I think the higher amount of margins along with, I think, the top line growth is definitely going to be a good possibility. For Shyam Metallics in particular, I think one when look at, I think, the backward integrations and at the same time, I think the power, which is basically the key ingredient for this entire space, the way in which I think this company is integrating, probably it is giving the further roadmap ahead. So we don't have coverage, so specifically I won't be able to address, I think, the value-wise. But I believe that I think the sector as a whole looks good and this company has a potential.
Let's talk about another big mover, and that's Interglobe Aviation. And here it's another brokerage note. In fact, two of them, HSBC and Jefferies, have issued buy calls on Interglobe Aviation. That stock is up 4%. Nimesh joins in with the details. Nimesh.
The stock is buzzing in trade largely on back of a couple of upgrades which have come in on Interglobe Aviation today. But do remember, the very near-term headwind for the stock would be the potential sale of Gunwal. The 5-month lockup has got ended last week, so anytime that block can come. However, in terms of brokerage notes, Jefferies has today upgraded the stock to a buy from hold, and they've raised the target price now to 50 to 25. I guess most of the brokerages are between 5,200 to 5,600 in terms of target price on Interglobe. Now, they believe that the company's operating performance has consistently surprised positively in the last 12 to 18 months, and the fact that the industry capacity additions is very precarious, which would mean that the spreads are going to be quite healthy going forward as well. On back of all this, Jefferies has today actually raised the EPS estimates by 6 to 7% for FY26 and FY27. Even HSBC has put out a note on Interglobe Aviation. They've raised the target price now to 51.65. They believe that the addition of business class will mean that the monopoly of the competitors like Air India will end, and this will expand the business for Interglobe in the corporate category, and that's going to be a big chunk going forward for Indigo. So back of all this, even they have raised the target price. So multiple upgrades coming in, but do remember, as I said, the very short-term headwind for the stock would be the Gunwal stake sale. They still own 20% stake, and they've been selling every 150 days for 5 to 6% in the open market. So that's going to be a near-term headwind for the stock.
Okay, thanks, Nimesh, for explaining that. Yes, absolutely. So we need to keep that in mind while we're looking at, of course, a lot of the positive brokerage commentary that has come through. Devin, what's your view? Indigo, Interglobe Aviation, I mean, practically the only flyer left in the sky, or the airline left in the sky now.
Yeah, I think one will remain bullish about the prospects, of course, given the kind of territory in which the crude oil prices and I think the aviation fuel prices are likely to remain. I think it all inspires, I think, further amount of confidence that going forward in subsequent quarters, you are likely to see relatively better amount of margin because of the lower ETF cost. That's the first point. Second most important, I think, the premiumization of seats, which is more important to me. According to me, I think with the premiumization of seats, around 18 to 20% kind of a revenue growth, I think would probably come from this area, where the profit margins would be relatively on a higher side. Given these two factors and along with the possibility promoters selling the stake, wherein I think the new investors walking into the company, I believe that I think there is more upside in the stock than the downside. Fortunately, the valuation-wise, I think the stock is remaining in the price-earning ratio of around 20s. So that's not so expensive given the kind of growth trajectory that it is assuming.
You know, despite the stake sale by Gangwal earlier this year, the stock still continues to move up. It's 50% up year to date. And even in the last 1 year, the stock has rallied 80%. So yes, there's been a supply overhang, but the stock continues to rally quite a bit. David, you want to quickly come in on Zomato and Paytm? Big news, but the stocks are not reacting.
Yeah, I guess I think for Zomato, it makes sense to create as many number of hooks as much as possible to retain the customer, cross-sell the same customer, and I think grow the size of the revenue. With the entertainment business, I think the ticketing business, which is coming in along with, I think, which is at 7 times the revenue multiple. I believe that I think they have got a significantly large amount of cross-selling play in this case. Because out of the 4 current verticals, I think they probably have 3 verticals in B2C segments. And with this entertainment vertical entering into it, probably I think you are seeing the possibility of cross-selling, and that's where I think the higher amount of profits and the margins can be talked about. So I believe that I think it's the right strategy which they are implementing. Of course, they are leveraging the market values, I think, at this point of time, the market capitalization in order to get this kind of acquisition steps. So they have been extremely successful with Blinkit. I believe, I think this is one more opportunity coming in their way. So hopefully, I think this can deliver better results.
Devin, thank you very much. Good speaking with you. Appreciate you joining in with all that perspective. We'll take a break. We'll be joined by Siddharth Vora of PL Asset Management on the other side. Stay tuned. That's coming up. Okay, welcome back. You got the market, which is treading water. I mean, just about 35 points higher. Holding pattern, no real great movement in the last couple of hours now, but holding above the 24,800 level. Siddharth Vora is with us. He's head of Quant Investment Strategy and Fund Manager at PL Asset Management. Siddharth, good to have you with us here. Thanks very much for your time. Prashant this side. Now, take us through what you're doing. Where are you finding the quant ideas to go long and to make money? I mean, where are you finding momentum really? Because it's, if you just pull back and look at it on a day-to-day basis, you just get the feeling that, stuff which is up sharply, 2-3 days, sharp reversals, 2-3 days later, then something else starts to move. It's a very broad rally, absolutely no taking away from it. But to get behind and stay long, do you find it challenging? Go on.
So, hi Prashant. Firstly, thank you for having me on the show. And I'll just take you guys through what we're really doing and what we are reading based on our quant indicators and models. So the first takeaway is that we believe that the strategy must now change from return maximization to risk minimization. That's a very clear signal that we're getting from all our models. When I look at things like volatility measures, we know that volatility has come off quite sharply in the markets, but at the same time, the risk appetite has also come off. And if I look at style orientations now, it's a very clear comeback of the quality low vol style of investing. And we believe that the best cycle for the whole value and momentum approach, which worked in the past 3 to 4 years, that is nearing its end. We also see that polarization, which was not existent in the market for the last 3-4 years, is now likely to make a comeback. So the whole broad-based rally, the whole democratization of returns, which we saw in the last 3-4 years, our signals capture that there is a mean reversion within the theme of polarization. And when I look at it from a valuation perspective, large caps still continue to be relatively cheaper than the mid and small cap packs within India. And having said that, we have completely taken a very, very defensive stance. So I think 75% of my portfolio now is allocated to sectors such as consumer staples, healthcare, consumer discretionary, and IT. So within this whole fabric of the market where we're seeing risk appetite go down, momentum and breadth coming off, we are taking a shelter within the defensive sectors, the non-cyclical sectors, so to say, as the focus of the strategy is no more capturing the highest upside return. It's capturing alpha by minimizing risk rather than by capturing upside returns. So there has been a lot of change over the last couple of months that we've made in our portfolio as well.
Siddharth, that's very well explained, but what are the parameters that you track which suggest that the strategy now needs to shift to minimizing risk? In your internal model, the quant model that you track, what are the parameters that you track?
So we track a lot of market risk indicators. We track a lot of market breadth indicators. We track macro risk, which as even currently the macro risk models are quite sober. We don't have any major red flags on the macro side of it. But when I look at valuation indicators, breadth indicators, sentiment indicators, volatility indicators, all of them are close to their multi-decade, multi-cycle highs. And usually when these indicators trade at such extreme zones, we see sort of mean reversion play out in the next 3 to 6 months. Just to give you an example, right? Industrials or PSU for that matter, these sectors are trading at the 95th percentile of their long-term averages, which means we should expect some sort of mean reversion in terms of returns in these sectors. So as the risk reward opportunities start getting narrower in sectors or in style baskets like value or momentum, we automatically gravitate towards those sectors and those styles where the risk reward is still more favorable.
Okay, so you're going to low volatility as one part of it, basically getting back to defensives. So that you made a point on the way this whole polarization theme is playing out. Can you elaborate on that? What exactly do you mean?
So for the last 4 years, if you look at data, it will tell you that the top 10 stocks in India have the lowest concentration in the total market cap of India. That's not because they have underperformed, which they have, but it's not just because of that. It's because the rest of the market has done so well. Now, this particular indicator is seeing a comeback, which means it's a combination of the top 10 doing better and the rest of the market sobering down. So that's just one example. Like that, we have 10, 12 different polarization and market breadth indicators. Another simple example is Nifty 500 equal weight to Nifty 500 market cap weighted index. We track the ratio of these two indices. Again, this is showing that the last 3 years have been very broad-based markets. And now this is going back towards the market cap weighted index doing better, which means we're going back to a scenario of some sort of polarization in returns. And I'm not talking about profit or revenue polarization. I'm simply talking from a risk return perspective.
Oh, got that. You mentioned that in your portfolios, you're going back to defensives. You said IT, consumer staples. Didn't hear you mention financials anywhere. That's where, it's still very confusing for investors because on the polarization parameter, the first thought to my mind was, HDFC Bank. Is it a return of the likes of HDFC Bank? But what's your overall stance on large financials?
So the way we look at financials, it's not just banks. For us, we've actually made bulk of our returns from the financial sector without owning even one private bank. Currently, there's roughly a 14% allocation to the financial sector, but we have different names. We're mainly exposed to the capital markets theme rather than the banking theme. And even if you track the fundamental cues, it's very clear, right, that deposits are not growing fast. The credit deposit ratios are turning adverse. And the sector is still plagued with lack of growth visibility. And as opposed to that, within the financial sector, annuity-based businesses like wealth managers, asset managers, they are doing much better. They have much higher visibility. And if you look at them on a PEG basis or a growth-adjusted basis, their valuations are still not ridiculous. So in a time like this, I would classify banks still as a cyclical sector and capital market plays still as a higher annuity sector. So given this dichotomy of earnings that is visible for the next 3 years, we still are more comfortable owning the capital marketplace within our financial exposure and completely staying out of the private bank, so to say, which, as you're mentioning, has a lot of value and a lot of mean reversion possibilities going ahead, but nothing in our model so far.
Siddharth, quick answer here. Since when has your model been flashing red? Because so far a correction has not been forthcoming. And you said that typically in 3 to 6 months, you do see a mean reversion or a correction in this case should happen. So since when has your model been giving you these signs?
So what we've done, so last 12 months, the first 12 months of the portfolio, we were a value momentum fund where we were running a 25 to 30 stock portfolio. 2 months back, my models started giving red flags that, okay, we need to change the regime. The style regime is changing. The risk regime is changing. We're going out of risk on and moving into risk transition. We've not gone into risk off yet. So we're going into a risk transition zone. So in this risk transition zone, my portfolio allocated 50% of its weight to a quality low vol theme and another 50% to a value momentum theme. Usually we run a 25 stock portfolio. Given that there was a risk transition and a regime conflict, we diversified to 50 stocks to manage risk. And now that there is more clarity that we are in fact in a quality low vol regime, we've gone completely in a 30 stock portfolio in a quality low vol regime rather than dividing between two. So it's been 2 months since my models have been flashing red. And now, of course, it's very clear that we're moving into a quality low vol sort of strategy.
So do you want to tell us sort of 5 names which fit the criteria?
See, as a quant fund, you're never that bottoms up. You're always top down. You're trying to get your sectors right. You're trying to get your style orientation right. You're trying to get your asset allocation right. You're trying to get your large, mid, small mix right. And you're trying to get your beta right. And whichever stocks fit within these criteria automatically come in. And as of now, we are actually in the process of rebalancing the portfolio. And hence, I really cannot disclose any stocks that we're likely to purchase as we go along in the next 4 or 5 days.
Okay, all right, next time then. Sid, thank you very much for joining us. Good speaking with you. Appreciate you joining us here this afternoon. Well, 45 on the Nifty. We've got, what, 24,800 plus on the index. And things are looking a little better as compared to when we started at 230. 10 points better compared to when we started at 230. Well, TVS Motor has launched the new generation Jupiter 110 scooter in India, starting at an ex-showroom price of 73,700 rupees. The scooter will replace its decade-old outgoing version, and it'll be available in 4 variants. From the sidelines of the launch, our colleague Parikshit Luthra caught up with the company's director and CEO, K.N. Radhakrishnan, to know more about the vision for the new product and, of course, prospects for the company from here on. Let's play out some of that interesting conversation.
It's a huge market. If you look at scooters in India now, the category share of only ICE scooter is about 32%. And it has been steadily growing. I just wanted to give you some statistics. You know, the CAGR with the last 10 years, 4% is the two-wheeler growth, 8% is the scooter growth, and TVS scooter growth is 12%. TVS has got, as you know, Zest and Jupiter and Ntorq. We have a complete portfolio of all the products addressing both commuter and sporty. And within the TVS growth of 12%, Jupiter is one of the brands which has done extremely well. It has grown 24%. And we have more than 6.5 million happy customers in the Jupiter brand. And today, very important day for TVS because we have given a completely new next generation platform on Jupiter, which gives a completely new design, performance, comfort, and convenience, and 15 first-in-class features, you know, which are definitely going to delight the customer. Whether it's the innovative iGo, assist with a 10% more mileage and better torque, fully digital console, double helmet space, front fuel fill, infinity lamps, new lightweight, engine, and I can keep so on and so forth, the kind of benefits it is, and Smart Connect. So this is definitely going to delight the set of customers, and this is a completely new next-gen platform, what we have delivered today.
Right. So you're saying that TVS Motor Company has seen a 12% growth in scooter sales compared to 8% CAGR of the industry. Now, within the two-wheeler addressable market, what is Jupiter's market share right now?
See, we look at, in terms of the growth rate, you can easily calculate. I think Jupiter is one of the best brands, which is thanks to the Indian customers. We have seen when you grow much ahead of the industry, you are able to gain much better market share. But really, we look at growing ahead of the industry, Parikshit.
All right. You're saying that you're looking to grow ahead of the industry. How do you expect the Jupiter 110 to contribute to your sales in the festive season?
See, overall, thanks to this year, I think overall the industry, the Vahan growth, April to July has been almost 13.5%. And what is really delighting is this year, the rural for the first time is ahead of urban. Okay. And we are extremely happy that the industry is doing well. And we are doing better than the industry. And our scooter category is also doing better than the overall growth of TVS. So this festival season, I am of the view that you will see much better growth rate than whatever the 13% what you are seeing, because the sentiments are positive. We are expecting a normal monsoon this year. And we will do much better with especially this product launch. I'm expecting much better growth than the industry. If the industry is going to grow minimum more, see, so far we have seen 13%. I'm expecting much better growth rate, maybe 15% during the Diwali and the Puja season. Everything is happening in October. And I'm expecting much better than that 15% growth what you have seen for TVS.
Okay, so looking at a bumper festive season, that's TVS Motors with its new version of the Jupiter 110. We'll take a break with that. Come back on the other side and, of course, check on all the chatter that we're picking up from dealing rooms today and some final trading ideas with Mitesh. Welcome back. Well, it's time for our D-Street Chatter segment. We have Nimesh joining in. Nimesh, it's been a slightly quieter day for the market. You tell us, what are you hearing from the dealing rooms today?
Well, you know, so be quiet but positive, and the good part is that there is now momentum in the financial stocks. That's been the best part. That, you know, not only the private banks but even the NBFCs are buzzing in trade. So that leg seems to be now supporting the bull market, or for that matter, the bull rally in the Nifty and in the Bank Nifty. So again, and that's backed by some bit of buying as well. That's the overall sense. From a flow perspective, again, there is a small MOC buy basket at a leading FID. So maybe some stocks will get impacted in the last 30 minutes of trade because of that MOC buying. Again, the big theme seems to be the block deals, right? Today itself, we've seen 5,000 crores worth of blocks getting executed. That too in pre-open. So looks like clearly, it's between the institutions that they've bought a stake worth 5,000 crores, and there is more lined up in terms of large block deals. I've been saying this for the last many days that there are many large block deals which are lined up and been executing as well. Technically, again, this momentum is something to watch out for. So again, I'm told on a week-to-week closing basis, if the Nifty sustains above 24,600, then there could be further short covering rally in the large cap name. So that's the overall feedback. But the good part is today, while the markets are quiet, there is a bit of momentum back in the financial names.
And earlier this week, you told us about that Kalyan Jewellers block likely to take place, and that happened yesterday. So what else have you picked up in terms of individual stocks in your chatter?
Well, so the first stock in my list today is Ramco Cements. Again, the entire cement pack seems to be buzzing in trade today, but Ramco stands out largely on back of very strong buy flows. I understand that leading domestic mutual fund has turned aggressive buyer in that particular name, so that's the reason why that stock is buzzing. The second stock is SpiceJet. Again, this is going to be quite interesting. Big move in that stock. In the last 10 days, the stock has rallied pretty hard. We all know the kind of troubles the company is going through. But I guess the street is very much excited about the fundraising, which can potentially come very soon. I guess the company is looking to raise money via QIP, so that's something to track going forward. The third is Crompton Consumers. Again, like we saw in Ramco Cement, very strong buy flows, expect high delivery volumes, and looks like the FI momentum is back in Crompton Consumer as well. And the last is MOIL. Surprisingly, there are sell flows at these levels from larger FIs. So a bit of profit booking or whatever, but there are sell flows, so expect high delivery volumes in MOIL as well today.
All right, there's MOIL, Crompton, SpiceJet, Ramco, Ambuja is the other one, right, Nimesh? Which
yes, Prashant. So
should see some action later.
Looks like, Prashant, we saw the CNBC exclusive as well, that the Adani Group is looking to raise money in Ambuja Cements, in Adani Power as well. And of course, we all know that the long pending QIP in Adani Enterprise is also likely maybe in the first week of September. But as far as Ambuja is concerned, there is a very strong indication that yes, there could be a large block. 4-5% is what the promoters may sell in a block deal, which can come very soon. It looks like the demand is quite strong. So need to see how it gets executed. But looks like the block is around the corner.
Nimesh, heard anything on Raymond? I mean, I think the real estate business gets listed in the next 2 weeks, right?
Correct. So that's one trigger, but I think the management also spoke at length across most of the conferences. I think we also got them from the Motilal conference yesterday. Looks like the business momentum is something that they are very bullish on, and maybe that's something which is keeping the street excited.
Okay, all right. Nimesh, thank you very much for that. So that's a bunch of stocks we will watch out for. Mitesh is back with us with what he'd like you to do with a BDST trade. Mitesh, what do you have?
HDFC Life and IDFC both look good to me. So IDFC is a BTST with a stop at 111 for targets of 116, 117. And HDFC Life, after making a new high, has been sideways, but should see continuation. So keep away tight stop at 720, look for a 736 for target.
Okay, all right, Mitesh, thank you very much for that. You have a good rest of the day. Now let's focus on Zomato. The story has finally come through. The company has acquired Paytm's ticketing business for a little over 2,000 crore rupees. Manglam is here to tell us more about how Zomato's plans to grow the third B2C vertical in its portfolio are likely to play out.
Well, the script is out. What is that? After 2 months of speculation, reportage, and the company's talking about being in touch with each other, Zomato's acquisition of Paytm's ticketing business for a little over 2,000 crore is their new bet on the going out business itself. Remember, they've announced a foray into that through their third app, which is District, which could launch any time in the next few weeks, as per Deepinder Goyal itself. This will be their third app after, of course, the roaring success of both Zomato as well as Blinkit. So to understand what Zomato's game plan here is, how big can this be from a shareholder value creation standpoint, let's take a look at a couple of numbers. You know, the business that they've acquired from Paytm, they had a gross merchandise value of close to 2,000 odd crores. They had a revenue of 297 crores as of FY24 with EBITDA of close to 29 crores itself. Now, these numbers imply at 2,048 crore, the deal was done at a one-time GMV and 7 times sales business, which has an implied take rate of 15% and margins of 1.5% of GMV. What does Zomato plan to do post-acquisition? They intend to transition customer traffic from Paytm Insider, Ticket New, all these apps to District, and also incentivize customers to move to District. So you and I as customers could brace for a lot of offers as well. They're targeting FY26 GOV at over 10,000 crore rupees with rapid growth, which implies a 40% CAGR as well. They also see medium to long-term margin potential of anywhere between 4 to 5% as a percentage of GOV. Additionally, they say further scale will depend on newer use cases beyond just ticketing like shopping, staycations, travel, etc. Now, assuming all of this holds true and using conservative estimates versus the company's own guidance and projections, FY27, the GOV could actually be over 20,000 crore with an EBITDA percentage of 3% of GMV, telling you the absolute EBITDA could be close to around 600 crores. Now, if you just juxtapose the current deal multiples to that itself, which means the business could value itself by over 20,000 crores. That's a 10 to 12 times jump over the 2,000 crore that they've paid for this business. And this does not even account for newer use cases or further synergies and, live event IP valuations, etc. as well. Now, for normal, deals, a 10 to 12 times jump in 2 years seems extremely high. But for Zomato, it's par for course. We've seen that with Blinkit as well. From the price that Zomato paid for Blinkit in 2022, the valuation of Blinkit itself has rallied by over 20 times, with brokerages citing further upside for quick commerce as well. So the short point, the bottom line is that the street expects at least 10 to 12 times valuation extraction from District, which the management has earlier said will be their third major value driver in the B2C space.
Thank you very much for that. So the question now is, has Zomato perhaps overpaid a little bit for Paytm's ticketing business? Because they are spending 2,000 crore rupees for acquiring 10 million customers. That's about 2,000 rupees per customer. And can they create the kind of value from this business like they did with Blinkit and quick commerce? Can it follow the same playbook and the trajectory? Amrish Baliga is now with us. Amrish, your quick comment?
This is, I think, a very good deal for Paytm, no doubt. Zomato surely has paid a bit more than it should have. But then I think they have decent reasons for that, because when they bought Blinkit, the markets had a negative reaction. There's a question mark on whether they'll be able to scale it up. But the way they have scaled it up, I think that's, giving the markets that confidence that even with this buyout, I think similar sort of a thing should work out. But I think it'll take time. I think we'll have to give them at least, 2 to 3 years to, in fact, show the performance as far as that is concerned. So because of this, in case Paytm, Zomato comes down, because of this, it's corrected a bit today. But in case we see levels of, say, about 220, 230, I think it's a good buy at those levels.
Okay, all right, Amrish, thank you very much for that. Stay with us, though. We're going to come back. I think you have a stock for our viewers, right? So let me tease that out for our viewers. Varun Beverages, and Amrish will tell you why he likes that one. Markets holding 40 points higher. For now, we'll take a quick commercial break here. We are back with Amrish and more stocks on the other side.
Welcome back. So just about 7 to 8 minutes left before we get to closing bell. And 24,800 remains on the board. Amrish Baliga is with us now to take us through the last leg. Amrish, good to have you on. Let's first start with your stock pick of the day. You're looking at Varun Beverages. You like this one?
Yes, Ravi, because one of the largest franchises of PepsiCo globally outside US, with a reach across 27 states and 7 union territories in India. Last year, in fact, they bought Bevco of South Africa, and with this, they have created a good footprint in the African region. Carbonated soft drinks category dominates this segment, and it's about 76% of the total volume. And juice category is about 8%, water is about 16%. And generally, the energy drinks form about 14 to 15% of the total beverage markets globally. And they have, in fact, introduced Sting energy drink about 2 years back. And with this launch, they have acquired extremely good market share in that space. So that's going to be a driver going ahead. Strong overall performance in Q2 because they follow the calendar year. It was a robust 28% Y-on-Y growth of revenue driven by both domestic and international market volumes. Expected revenue growth is about 24% CAGR over the next 3 years. And I'm expecting an EPS of about 33 for calendar year 26. And with this, my target price is about 18.15.
Okay. That's Varun Beverages. Just taking you through some of the major movers and shakers of the day, Amrish. I mean, today has been a great day for stocks like Jyoti CNC, Varroc Engineering, quite a few names that are flying around. Any thoughts in case you've seen these two, Jyoti and Varroc?
No, in fact, I had missed both these, so a bit difficult for me to really comment on them. Yeah.
What about something like a Kalyan Jewellers? We've been used to promoters, PEs selling stake in the company, but here is a promoter who's gone out there and bought a stake in the company today. And look at the way the stock has been rewarded, 10.5%. It's anyway been a big mover, 70% gain so far this year. Numbers have been strong. Do you like Kalyan and this reinforcement by the promoters?
I mean, that really gives a confidence because, I mean, you've seen across that most of the promoters have used this huge rally in the last 2 to 3 years to, in fact, book out to a certain extent, whereas we have seen Kalyan Jeweler promoter, in fact, buying at these levels. So that gives it confidence. So I'm sure that, I mean, there should be a decent upside, but I mean, it's already moved up. But then, yes, I think we can still see some more upside from here, possibly levels of 700, 725.
But would you buy it at current levels of 600 rupees?
No, I mean, at this point of time, I'm not really a big buyer in the market. In fact, I've been booking out to a certain extent. I mean, the ratio which I'm following right now is I sell 80 rupees worth and buy 20 rupees worth. So out of every 100 of transaction, 80 is sell, 20 is buy.
80 is sell, 20 is buy, but what is in the 20 is the question, right? Amrish? So by the way, in the 20%, not 20 stocks, just tell us, because your list of ideas which you want your subscribers to sort of be invested in, what is in that list now, Amrish, if you can share with us?
In fact, I'm buying a bit in IT. I mean, a stock like Tata Technology is what I'm buying. I'm also buying into Infosys to a certain extent. Among the smaller ones, it's Latent View in that space. I'm buying into FMCG. I mean, stocks like ITC, I'm still holding and buying more on every dip, although I've not seen that dip for a while. But when it had corrected, I'd bought ITC. Again, in like auto, I'm holding on to stocks like TVS. I would buy Maruti possibly on a correction. So these are sort of stocks I've been buying, and mostly in the large caps because I see small and mid cap corrections still continuing further. And as far as defense is concerned, I'm completely out of it. I still see a further fall.
And totally, I mean, in terms of stocks that not just in the portfolio, but what you're actively asking sort of your investors, subscribers to buy now, these are all, are there more? I mean, I count about 6 names here.
Yeah, I mean, there are more, surely. I mean, there are about 20.
There is Varun Beverages.
Varun Beverages, yes, but then I'll not be buying it now because I've recommended it, I mean, on the channel. Yeah. So I to have that cooling period before I start buying.
Okay. What else, Amrish? Give us a few more ideas, broadly.
Broadly, like I told you, I mean, it's basically these three sectors which I've been buying. So, I mean, the other stocks where I would, possibly buy going ahead in the next couple of weeks. It's difficult for me to really recommend that on the channels because I need to, have my subscribers, my clients buy it.
Okay.
So, before that, I really can't, inform publicly.
Amrish, you just said that you're completely out of defense stocks. But I remember recently you had recommended BEL, if I'm not mistaken. So is that an exception?
No, that's an exception, no doubt. But then, if you remember, in the last 3 to 4 years, I've been recommending defense stocks across. And like right now, we are mostly out of the. Most of the stocks we are out, except stocks like BL.
You know, you said Tata Tech, Amrish. The high on Tata Tech was 1250. It's about 1,000 rupees right now, right? What's the? Are things turning, or is just like a defensive bet and there's price comfort?
See, currently it's a defensive bet. In fact, we had suggested, my clients and subscribers to buy in the IPO. And those who bought in the IPO, we did exit in the first 2 to 3 days. We got levels of, I think, closer to 1,400 if I'm not wrong. And I had suggested that one should start buying at levels of closer to about 1,050, right down to 950. But we not got those levels of 950, but at least about 3 or 4 lots we've already bought. I think the last 1 or 2 lots will buy closer to 950, 960 in case it comes.
Okay, all right, Amrish, stay on. We'll just quickly go through the final rates. We're down to the last couple of seconds. Today's trading action, 40 points up is what the Nifty is giving us. But the real headline comes in from the broader market again, 400 points on the mid-cap index. Contrast that